Good day, guys. Welcome to Trading Arbitrage Opportunities from Calvin Ports. Uh, with Calvin Ports, not from Calvin Ports. Uh, Today, I have the euro, my friend here, the euro. So, this is the euro pound. We already know what the market sentiment on the euro is. We know that the euro is giving us a bullish market sentiment, even though we're expecting a pullback at the moment. uh, the euro has we're trying to trade the euro. Let me explain to you what I'm expecting on the euro here. We had the market test the 203 point the 50% fee and it came back to the 23.6. Now what will happen here will be decided on what we're going to be looking at. So uh, here we have the Danish krona. The Danish krona is known to be the capital of the planet, and since Denmark is in Europe, it is giving a very beautiful correlation between the euro and the Danish krona. I don't know how these people do this correlation, but they even go as far as copying each other. As you can see, this is the euro, the interest rates in the euro. This is the 6th of June. The 6th of June here. They made their first interest rate cut, which is the interest rates were at 4.25%. And they were at 4.5%. They cut their interest rates with 25 basis points, and this is the euro. On Denmark, they did the same thing. On the 6th of June, they made their first interest rate cut from 3.6% to 3.25%, which is a 25 basis. Uh, was it? No, it wasn't. It wasn't. I'll check what the interest rate cut was here because we have 3.6 and we have a 3.6 and a 3.35. You can calculate that for yourself. So that's but they both made their first interest rate cut since September the 15th. They made it on the 6th of June. So these two currencies are well correlated. The in Denmark is okay. I don't want to talk about Denmark, but these two currencies are highly correlated. So here we have what we call a balance of trade. A balance of trade uh, has given us here in Denmark has given us a trade deficit. Uh, so because of this trade deficit, we cannot expect the government in Denmark to spend more than it has, which is since they had a trade deficit. Let me show you. Here, government spending in Denmark drops gives us a bit lower, but these releases are not made at the same time. The trade balance comes ahead of the government spending. So when you see that they have a trade deficit, you cannot expect Denmark to spend for Denmark government spending to give you a bit higher. So the way that I use these economic events is that when is that I look into the future of the currency to say even though uh, government spending will be released at the end of the month, but right now we have a trade deficit. We know that at the end of the month we're going to have a bit lower in government spending because we already have a trade deficit. A trade deficit is like when you invest like $50 on a business and your car breaks down and you need to fix your vehicle. So when you fix that vehicle, even at the end, you need to pay the mechanic. Even at the end of selling your product, by the time you sell those products, you're going to discover that from the $50 that you were expecting to make $70 and $20 in profit, but because you paid $30 to the mechanic, your profit will be at the end. The money that you remain with will be $40, which is the trade deficit that we are talking about. A trade deficit is a loss in the business that you're going to be doing. So if you have a loss in your trade balance, we cannot expect the government to spend more than they have, unless if they go and they borrow money for them to be able to do that. But normally, this thing about borrowing money normally happens at the beginning of the year when they announce what they're going to be, what when the politicians are talking about what they're going to be spending for the year. So here, since we have this in Denmark, the euro has not released anything uh, so far. The only guy who released what we're looking at here is a trade deficit in Denmark. And because of the trade deficit in Denmark, these two currencies are highly correlated. I don't have a market sentiment in Denmark that is telling me I don't have a market sentiment in the euro that is telling me to sell the euro. But here we have a weakness in the future of, of Denmark, even though both currencies are recovering uh, economically from the recession. It's the early days, but I know that after doing my research that both currencies have recovered from a recession, from the current recession that we're having. Someone would say, why are you not buying the euro because those currencies have recovered? I cannot buy the euro because I'm still looking at the market sentiment in Denmark that is telling me to continue to sell the euro, which is this trade balance that I'm looking at. It's not only the trade balance, there are many other economic releases that I'm going to be looking at. But for now, I'm going to be selling the euro based on the economic correlations that we're looking at. So here in the euro unemployment rate, I'm expecting a bit higher, something above 6.3% in the future, not now. I'm expecting it when they do those economic releases. I'm expecting a tiny bit higher, even though the euro had not released anything. I don't know anything in the euro. I just know the information that I have in Denmark so far. They have aligned. Those are three economic events, and they have given me this market sentiment on the last 2 months that I had. So that's how I'm trying to offset some of my pound positions with the euro, even though I'm looking at the Danish krone. So a lot of people talk about correlations and they end with currencies like in price action. They tell you that correlations will happen in a currency. This currency when this currency does this, that other currency does that. I look at economic events. Uh, I look at this is where I check. I look into my correlations. I don't just look at correlations back into. Okay, I am a fundamental trader, a carry trader, or what we call an economic divergence trader. So this is what I look at, and this is how I look at I This purple line, you're gonna be seeing a lot of this purple line. This purple line is an economic projection of where the currency will go. So because we're having a weaker euro, and as you can see, the pound is on the right, meaning when the pound is gaining strength, even though we're expecting a pullback in the pound. Remember, the other currency, the pound SGD. The pound has reached the 50% peak on the pound SGD, and we're expecting the pound is like here on the pound as on the pound SG. We made it to the 50% peak. We're expecting a tiny pullback on the euro, and after that tiny pullback, we're gonna be selling low. So here we have something else. It's telling us that we made it below the 23.6, and we're about to take off. Now the euro economically is telling me to here I am supposed to be selling the euro and buying the pound, even though I am expecting a pullback in the pound. We can still wait. We can still take our time in taking this trade. We might get a tiny pullback from here before we actually get the pullback. We might as well get our feet. We might as well create our feet here, so that we can get something like this. Like this is some kind of an order block here where we're expecting that pullback. So I'm gonna be trading this, looking at I'm gonna be using a sell stop on this currency to offset some of the economic releases on the Danish krona. The remember the euro is not being used in terms of economic events. We're going to be trading it, looking at the Danish krona. The there's a trade. I have a trade here on the that I took using the same system. It's the pound JP, the euro JPY, and that trade gave me a very beautiful takeoff on the last trade that I took. So it was somewhere. I think it was in April. I think it was in April. This was in Feb. I took this trade and I was not looking at the I was not looking at the Danish krona, but because I was not looking at the euro. I was looking at the Danish krona, but because I was able to see the future of what will happen to the trade, I was able to catch the economic divergence between the JPY and the euro. But the the trade, the research was made between the Danish krona and the Japanese yen. The euro normally, because of these correlations, I don't know what is happening between the euro and the Danish krona, but before the euro provides the news releases, it's like they need to confirm with Denmark first before they do those news releases. So uh, because of the delay in the news releases and Denmark releasing its news releases first, I normally take advantage of that economic correlation ahead of the news release. I think this is why we end up having what we call correlation. So here I was trading two positions and I expected the market to come back to my 23.6. It didn't. It just took off and it never came back. So I was forced to take profit up here and use the remaining position because the market did not come back down here to take off. So goodbye guys. This is the end of our video. See you on the next episode.